I read a recent article about what Goldman Sachs predicted for the American economy. Let's take a look at it. Welcome back to Berich. Goldman Sachs was blunt. It said that the recent rally in April was unjustified. There was an 18% rally in American stocks. They expected to crack big in the coming 3 months. What are the reasons given by Goldman Sachs? A. Goldman Sachs says this rally has been influenced by fiscal and monetary policy. Fiscal and monetary policy to percolate down takes a long time. Most people who have been promised loans have not got loans. The banks have lent money to the big corporates who are their friends. People who do not deserve money have got money. 2. America is a largely service driven economy. Today, the services are down and out in the dumps. Restaurants, hotels, conventions, transport, nothing is functional. Theaters are shut down. Shooting is not taking place for new films. Overall, the services industry is badly affected. Second, we expect that the first quarter to be a big hit. They expect a 20% cut in the first quarter. To make up the balance is going to take a long time. Several importers of clothes, large importers of clothes, have declared bankruptcy. So December sales is also shopping season is not going to work. They have several special days like Black Friday, Christmas season, except call me 20, pay me 40 names. And all those seasons is going to be badly affected. For shopping to do well, people should have money in their pocket or at least able to buy on credit. People who don't have jobs, who lost their jobs, their credits are going to be cut and there's no going to be big shopping. So America is in for a sharp recession. A sharp recession means a cut in earnings. A cut in earnings normally translates to lower prices. This is what is happening in United States. Take us a look at India. The American economy was humming along before this happened in America. The Indian market was already struggling and slowing down. Earnings have gone nowhere in the last 2 3 years. India has never had a recession for a long time. Even the 79-80 recession was fleeting. For a first time in many years, or perhaps for the first time in independent India, we are going to have a complete recession. The first quarter GDP is going to be deep and sharp, and the rest of the year is not enough to catch it, to make up for it. So, a 5% decline in GDP means a 10% cut in Nifty and Nifty's earnings. This means definitely Nifty earnings are going to be in the region of 385 to 400. Even assuming a 400 worst case, 6,000 seems to be on the cards. If the earnings is 400, at 10,000, the Nifty is discounting it by 25 times. That is swimming without support. Like Buffett says, when the tide goes out, we all know who is swimming naked. There are going to be large salary cuts in corporates, lot of layoffs. So money flowing into the investments is also going to decline. The rupee is going to be under tremendous pressure as the government has already announced a 53% uptick in borrowing. This is not going to come as stimulus, some experts say. Most of this is going to be used to make up the shortfall in revenue. So we can safely expect the fiscal deficit to slip to 5.5 and 7. This means that the rupee is going to be under pressure. The moment the rupee comes under pressure, foreigners will press the exit button. For from 2008 till 2020, in dollar terms, the Nifty is being negative and there is no hope of recovery. So we can expect foreigners to keep leaving this country. The market, like I have said several times, has been held up by Reliance. This cannot happen for a long time. Sooner or later, markets will catch up to reality. Be careful in where you put your money. Thank you for watching Be Rich. If you like this video, please press the subscribe button and turn on the bell notification. I have given a WhatsApp number. If you want to buy my books, you may send your number and my team would get in touch with you. Finally, if you want to get in touch with me directly, please send a mail to berichenglish@gmail.com. At the very outset, I would make a request. I have a young team working with me, and they are working from remote locations under a lot of stress. They will get highly motivated if you press the like button and give a thumbs up signal. I request you to do it.